You were saying about the numbers, were they in line with your expectations?
No, we'd actually expected inflation to edge up to 10.9%, partly due to the weaker naira we saw in December. However, it's a big positive that inflation slowed. It shows that the tightening of monetary policy was effective. You mentioned that food inflationary pressures, particularly monthly food inflation, went up. That is a concern and surprising given that this is the main harvest season, which began at the beginning of the fourth quarter. So that is a concern for inflation going forward. The other interesting observation I made just before I came to the interview is that transport fares seem to have picked up in December. That's interesting given what's happening with the fuel price now.
Right, of course, and those transport fares are likely to even pick up further. Now, what are your expectations for inflation this year?
Okay, now that we're talking about a phased subsidy removal, we're looking at inflation moving up into the early teens. So for now, we're looking at around 13% going into 2012.
All right, and let's talk about the prospect for monetary tightening in that context. If inflation rises, are we expecting to see the Monetary Policy Committee of the Central Bank to step up and raise interest rates again? They paused in November. I think markets were happy about that. But do you think that they may start that tightening cycle all over again?
We think they're going to maintain the tight monetary policy stance simply because, of course, the inflation outlook has deteriorated. We don't think they'll hike as soon as next week. We're sure that, firstly, they'd like to observe what the outcome of this negotiated fuel subsidy removal would turn out, what the outcome of it will be. We do expect further hikes during the course of the year, at least 1 percentage point, particularly if the central bank wants to maintain a positive real rate environment. And
to what extent are those expectations linked to the naira? I think many people are still concerned, even though we've seen interest rates move up to 12%, that tightening cycle won't be enough to keep the naira stable. We think the tight monetary policy stance at this point is positive for the naira, and the fact that the likelihood that we could see further tightening is also a big positive for the naira. So at this point in time, we're not too concerned about the naira outlook. In terms of the short to medium term, it's even a bigger positive that we're scrapping part of the subsidy. It implies less downward pressure on forex reserves, and that, of course, is positive for the naira. Okay, and your quick thoughts on the cost of the strike. In news out of Nigeria just now as well, we have the National Bureau of Statistics putting that number at 207 billion for the 8-day strike. What are your thoughts on the cost of the strike? Obviously, that is in the past, but going forward, given the image, the impact on the image of Nigeria that those strikes had, what are your thoughts on the cost to this economy?
I think just to contextualize, I think firstly the removal of the fuel subsidy was a big positive for Nigeria. So in terms of the perception of the international community, it's, I think, increased the credibility of the authorities, particularly in going through with the reforms that they've had promised. So of course the subsequent one are the power sector reforms as well as the PIB, and now we're watching to see whether they follow through with that. In terms of the impact on the economy, I think the biggest concern, particularly on Friday, was whether oil production would be shut down, and that hasn't happened. So we've started off the week on a good note for Nigeria, and I guess at this, yes, there have been losses into the economy because of the strike, but I think now there is further upside going into 2012.
Okay, I imagine you probably are not reviewing your estimates for GDP for this year, but what are your thoughts on GDP growth for 2012 for Nigeria?
We still think Nigeria could grow between 6.5 to 7%. That's a possibility. Our initial estimate had been 7%, but given the tightening or likely tightening of monetary policy going into the year, as well as the high inflation environment, we think it's more likely to be in the 6.5 to 7% region.